Today we are going to reveal the secrets behind the financial success of Charlie Munger, the famous investor and partner of Warren Buffett. Throughout his career, Munger has shared countless lessons on how to achieve economic prosperity and financial freedom. Join us on this fascinating journey through Charlie Munger's ideas and strategies that have inspired investors around the world. Get ready to discover how to apply this valuable knowledge in your life and achieve your financial goals. For those who are not familiar with the life of Charlie Munger, let me give you a brief introduction. Charlie Munger was an American investor, businessman, and philanthropist who died in November 2023 at age 99. He was vice president of Berkshire Hathaway, the famous firm run by his faithful friend Warren Buffett. In addition to his role at Berkshire Hathaway, Munger had an impressive career in several fields, including law and architecture. His turn to the world of investments was the result, as he said, of deep intellectual curiosity. Born on January 1, 1924 in Nebraska, Munger began his professional career as a lawyer after graduating from Harvard Law School. However, his true interest was always in business. In 1962, he met Warren Buffett, and together they formed one of the most successful partnerships in the history of the markets. Throughout his life, Munger developed a series of principles and philosophies that guided his success. As you'll discover below, these principles not only apply to the world of investing, but also to life in general. Principle 1. Cover different disciplines. One of Charlie Munger's core principles was to think logically and with knowledge in many different areas. According to Munger, to make good decisions, it is not enough to know economics or finance, you have to understand a lot of things, from psychology to history. This method of learning a little about everything allowed Munger to see problems from various angles and make better decisions. A key concept in Munger's thinking is that of mental models. Imagine mental models as different lenses you can put on to see the world. Each lens represents a way of thinking or a discipline, such as biology or physics. Munger says that if you only have one pair of these glasses, you won't be able to see the full image. But if you have many lenses, you can combine different ways of thinking and understand any situation better. Munger explains it this way. If you have many mental models from different areas, you can analyze complicated problems more effectively. It's like having a toolbox full of different tools. You can choose the right tool for each job. Thanks to this approach, Munger was able to find investment opportunities that others did not see and avoid mistakes. Another important aspect of this logical thinking is being aware of the errors our mind can make, what we commonly call cognitive biases. For example, confirmation bias leads us to look for information that supports our beliefs, ignoring the opposite. Availability bias causes us to give more weight to recent information, such as thinking that flying is more dangerous after reading news about an accident. Or the anchoring bias that leads us to base our decisions on the first information received, such as considering that a discounted t-shirt is a good deal simply because its original price was high. Munger believes that if we are aware of these biases and actively work to overcome them, we can make more objective and effective decisions. Therefore, Charlie Munger teaches us that to make good decisions, we need to think logically and with knowledge of many different areas. By doing so, we can see problems from various angles and find opportunities that others do not see. Principle 2. Keep calm and the discipline. Another of Charlie Munger's great secrets to achieving financial success was his patience and discipline. In the world of investments, Munger was always a great advocate of investing for the long term and not getting carried away by the emotions of the market. This means that, instead of trying to make quick money with hasty moves, he preferred to maintain a solid strategy and not be influenced by the daily ups and downs of the market. So unlike many investors who sought quick profits and switched stocks frequently, Munger, along with his partner Warren Buffett, followed a buy-and-hold strategy. They chose companies that they considered strong and with good fundamentals and kept them in their portfolio for a long time, even if the market was unstable. This approach allowed them to benefit from the growth of companies over time and avoid the costs that came with constantly buying and selling stocks. Patience and discipline were also reflected in how Munger chose what to invest in. He was known for being extremely selective when it came to deciding which companies to invest in. He was not rushing to make an investment. Instead, he waited patiently until he found an opportunity that met his high standards. He only invested when he was really sure that the investment had a good margin of safety and great growth potential. Munger used to say, "Patience and discipline are essential in investing. It is not about being the smartest, but about having the strength to maintain your convictions and not get carried away by the emotions of the market." In other words, instead of getting carried away by the excitement of the news, it was crucial to stay calm and stick with the long-term plan. This approach is an important lesson for anyone who wants to invest intelligently. Don't rush, stay calm, and follow a strategy with patience and discipline. If today's content is interesting to you, don't forget to give it a like and subscribe to the channel to be aware of our next videos. Let's continue with the list. Principle 3. Identify growth opportunities. Charlie Munger also had a method for finding sectors and companies that were really worthwhile. He was looking for companies that were not only in markets with a lot of potential, but also had certain advantages that made them stand out and remain strong over time. Munger always said that it was crucial to invest in companies that operated in markets with a lot of growth potential. What does this mean? Well, it could be an emerging market, such as a country that is growing rapidly and becoming richer, or a sector that is booming, such as technology or renewable energy. It could also be an industry that benefits from changes in population, such as increased demand for products for an aging population. According to this investor, for a stock to increase its value by 30, 50, or even 100 times, the company has to be growing a lot for many years. This means that the market you operate in must be really big and have great potential to grow even more. For example, if a company is in the clean energy sector and the world is increasingly focused on reducing pollution, then that sector has great growth potential. In addition to looking for markets with potential, Munger was also very careful to find companies that had what he called sustainable competitive advantages. These are qualities that make a company difficult for its competitors to beat. For example, a company may have a product that no one else offers, which is a very big advantage. Or you may have a way of operating that allows you to produce things at low cost, giving you a price advantage. Another type of advantage is the network effect, which happens when a company's product or service becomes more valuable as more people use it. For example, Facebook or Twitter. Munger always looked for companies that had these advantages because he knew that this allowed them to stay strong in the market and continue making money in the long term. Principle 4. Look for the simple. Charlie Munger was always a great defender of simplicity. He believed that the best decisions were usually the simplest, and that complicating things unnecessarily could lead to mistakes. Instead of pursuing complicated and convoluted strategies, Munger preferred to focus on understanding the basics and asking simple but important questions. This approach allowed them to make clear and effective decisions without being distracted by the complications of the market. Munger used to say, "Simplicity is key. If you can't explain something simply, you probably don't understand it well enough." This meant that if you couldn't explain an idea or investment simply, you might not understand all the important details. He believed that the best decisions in life were those that were simple and direct. So in daily life, this principle is also useful. If you're making decisions, like choosing a new job or making a big purchase, Munger would advise focusing on the essentials and not overcomplicating yourself. His approach showed us that sometimes the simplest is the best, and that complicating things for no reason was usually not a good idea. Principle 5. Learn from errors and failures. Charlie Munger had a very interesting way of looking at mistakes and failures. Unlike many people in the market, Munger wasn't afraid to admit when he made a mistake. In fact, he believed that mistakes are opportunities to learn and improve. This open and humble approach was one of the reasons he achieved so much success in his life. Munger always said that failure is something that will inevitably happen on the path to success. For him, the important thing was not to avoid making mistakes, but to learn from them when they occurred. He used to say, "Mistakes are inevitable, but the important thing is to learn from them and not repeat them." Every mistake is a valuable lesson that brings you closer to success. Imagine you are trying to solve a puzzle, and you make a mistake when fitting a piece together. Instead of getting frustrated and sticking with the wrong piece, what you would do is see what's wrong and adjust your approach. That's how Munger viewed mistakes, as a way to adjust and improve his strategy for the future. When Munger and Warren Buffett realized that an investment decision wasn't working out as they expected, they didn't stick with it out of pride. Instead, they were willing to admit they were wrong and change their approach. This ability to be critical of yourself and be willing to modify your opinion is key in a world that is always changing. This attitude of learning from mistakes and being willing to adapt is a very valuable lesson for anyone. It is not only about how to handle investments, but also how to face challenges in daily life. We could say that Charlie Munger taught us that making mistakes is part of the journey, but what really matters is how you react to those mistakes and what you do to learn and grow from them. Principle 6. Keep ethics and integrity in mind. Ethics and integrity were two very important things to Charlie Munger. For him, being honest and treating others with respect were not only moral principles, but also very intelligent practices. Munger used to say that integrity is the foundation of everything. In his words, without integrity, nothing else matters. In business and in life, being honest and treating others with respect is the key to lasting success. This means that Munger firmly believed that doing things right from the beginning, without misleading anyone, is not only the right thing to do, but also helps you build a good reputation. And that reputation is incredibly valuable, both in business and in your personal life. If you are known for being honest and fair, people will trust you, want to do business with you, and be willing to support you. For example, in the investing world, Munger and Warren Buffett often avoided investing in companies that they considered unethical or that were not running their businesses responsibly. They preferred to invest in companies that not only made money, but also contributed positively to society. This approach was not only morally right, it also made financial sense. Companies that operate ethically tend to be more stable and less likely to get into legal or reputational trouble. Consider, for example, that you are looking for a job and you have two offers. One at a company that has been accused of unethical practices and another at a company with a strong, positive reputation. Although working at an unethical company may seem tempting because of the higher salary, in the long run, working at a company with a good reputation can offer you more security and opportunities. People appreciate transparency and respect, and those qualities can help you build long-lasting, successful relationships in any walk of life. So, whether in business or your personal life, being ethical and maintaining a good reputation will always be a good way to go. Principle 7. Educate yourself all the time. Charlie Munger was always very passionate about continuing to learn throughout life. For him, knowledge was a key tool to be successful, and he believed that one should never stop learning. Munger not only devoted himself to his investment work, but also spent a lot of time reading and studying a wide variety of topics, from finance to history and philosophy. Charlie used to say, "Knowledge is cumulative. The more you learn, the more you can apply that knowledge in your life and decisions." Basically, he believed that what you learn is not lost, but accumulates and helps you make better decisions. For example, if you learn about economics, you can use that knowledge to make better investment choices. But if you also learn something about psychology or history, you can better understand how people think and how events unfold, which can give you an advantage in your personal and professional life. Munger emphasized the importance of being a lifelong learner. That is, you should never stop seeking new ideas and perspectives, no matter your age or how successful you are. This mindset of continuing to learn allows you to adapt to the changes happening around you and take advantage of new opportunities when they arise. From exploring various disciplines to staying calm in critical moments, Charlie Munger taught us that success is not only based on technical knowledge, but also on having the right mindset and a constant commitment to learning. Also, by identifying growth opportunities and looking for the simple, Munger showed us that sometimes the most effective solutions are the least complicated. In short, Charlie Munger's secrets for economic prosperity offer us valuable lessons that transcend the field of finances, applying to many areas of life. Do you know any other Charlie Munger principles? Leave us your answer in the comments. If you liked today's video, remember to give it a like and subscribe to the channel so you don't miss the next content.